Look, thank you very much, Paul, and thanks to the team at Reed Corporate for the opportunity to present here in Adelaide. Look, it's always lovely to come to Adelaide, particularly when there's a round of football on. I get to see the mighty Dockers play on Saturday, so I'm looking forward to that. But more importantly than that, we're delivering a gold project into the market at a time when we're seeing all-time high gold prices and a lot of macro tailwinds for gold coming in. So, we've had a good run in terms of, the gold price, but, the narrative around the gold price has been that they're going to cut rates the Fed's going to start cutting rates. That hasn't even started yet, and that's getting pushed out, but the gold price is still going up. We're seeing a bit of increased geopolitical tension around the world, which is always good for gold. We're also in an election year in the US, and that US debt position is not going to go down anytime soon. So I think that we've had a good run, but I think both 2024 and 2025 are set up really nicely for gold, just like it is for the Fremantle Dockers as we rise up the ladder. All right, there's the disclaimers on the ASX. But look, for those that sort of need the high-level pitch on Bellevue, we've spent the last few years discovering, then building a high-grade, high-quality gold mine in the northern goldfields of Western Australia. Particularly the last 2 years, it's been all about head down, bum up. Let's build this project, let's de-risk it, get it into production. And we're proud to say that we delivered that on time and on budget in October last year when we poured our first gold bars. Beyond that, we've just continued to go through that ramp up. The plant's going well, as Paul said. And we've been hitting our run rate. It took us 6 weeks to hit run rate, and we haven't dropped it since then, which is really good. And the underground mining is something we started years ago, and we're well ahead of the curve on, and I'll take you through a lot of that later. The journey from now on is, it's not just about ramp up and not just about gold production, but it's about growth from a resource, a reserve, and a production perspective. And that's really the levers that we're going to pull in the next 18 months. We also are a very positive ESG company. We've set high standards there, and we're seeing great results, which I'll take you through later in the presentation. Look, the last few months has been all about the ramp up. We've been pushing the plant. As I said, we turned it on in October. We hit our run rate by December. So these 3 months here, we were processing 85,000 tonne a month. What we've seen though is that as the grade has come up, so have the ounces produced, and we're looking forward to that trend continuing as we go through the year. The key driver of that is our stoping areas. So the higher percentage of stope dirt that we're putting into that processing plant, the higher the grade goes. And we've still got a bit to go, but as we get towards the middle of the year, we're setting ourselves up really well, and FY25 is going to be a strong one as we go. I want to say a strong one. We're already having a decent half. We've managed to put out guidance of 75 to 85,000 ounces for our first full half as an operating mine. As I said, there's no secret formula to success at Bellevue. It's really just about doing the day-to-day stuff well. So if we process our tonnes, if we deliver the high-grade dirt to the plant that we know the mine's set up for and we know that we're doing, we get the ounces in the plant. So we're really confident from a geological perspective that everything's there in front of us because we've got the data ahead of us. Puts us in a fantastic position where all we have to do is deliver this plan, and our balance sheet gets a huge amount of strength from when we passed the bottom of the J curve in January this year, and at $3,500 an ounce of gold, it's going to rocket up pretty quickly. But look, I talked about the data. It's one thing to say that you have a good, high quality mine. The reason we can say it is because we actually have the data to back it up. So, we've done a hell of a lot of diamond drilling here. So we've done over 160,000 metres of grade control drilling to really de-risk that early stage mine plan. That's a $20 million investment just in getting that database set out in front of us so that, when we make plans, when we say we can deliver to the market, it's not based on us just crossing our fingers and hoping that it's going to be there. It's based on actual high quality data as we go. We're underground mining. What happens after the drilling, you've got to go out and develop it. So you have a look at the development faces through the ore body, and these are from different areas of the mine. And what you can see is very high grade, very consistent, good rock conditions. It's just bolts and mesh underground. It's really just mining 101, what we do well in Western Australia. And positively, we've had really good reconciliation to date from the grade control to the face samples, which is why we made that investment in the drilling to start. Post that, we moved to our stoping phase, and that's what we've been ramping up. As I said before, we've done over 30 stopes to date. They've performed really well in terms of what we tried to get to plan. You can see some pretty skinny stopes, particularly that one on the bottom left there. But we've also got the right parameters, so we've got less than 10% dilution across that package of stopes as we've brought them out. So very positive to see it, because, as I said, it's a simple formula. We've drilled it, we've developed it, we're stoping it, it's all working, and it's just following that plan that's going to deliver these fantastic returns. Now, if I go through a little bit on the how the underground's laid out, and you can really see some of the strengths of the operation when you have a look at it in 3D, is the blue stuff here is all the underground development that we did through to the end of December. And what you can see is that there's a significant amount, there's over $180 million of our pre-production capital went into underground mining. So that's setting up all your declines, your level accesses, your ventilation systems, your power, your pumping, your escape ways, everything you need to set these up. So from the jump, we've got 1, 2, 3, 4, 5 different mining areas that we're ready to get into, with all of that infrastructure set up. So it's not like we're getting into production and then we've got a whole bunch of capital to spend to get to the next bit, then a whole bunch of capital for the bit after that. All the capital is spent up front, so it's very low cost growth from a capital intensity perspective from here. And if I go back to that as well and just talk about where the stoping growth is coming from, if I put it in long section, I'll do a bit of scribbling on here too, is we're a top-down mining method. So what that means is that the stuff that's closest to the surface is the stuff that we mine first, and the stuff that's closest to the surface is in an area called Upper Armand. So that has been a big focus in the early ramp-up stage. As I said before, it's about 85,000 tonnes processed. For that 85,000 tonne, we'll be doing about 60 to 65,000 tonnes of stoping, about 20 to 25,000 tonnes of development, and 20 to 25,000 tonnes of low grade. And that's been sort of the general mix for the first few months of the year. But as we go lower in the sequence, what you can see, I'll do this in a different colour, is, we're still producing out of here, but now Lower Armand, we're starting to get more levels open in. Bellevue South, we're starting to get a few more levels open in. And then Deakin here, get a few more levels open in. So we're actually seeing the stoping tonnes increase from those areas as we get deeper down into the mine sequence. And what that means is that we get to that sort of run rate that we're getting. Sorry, that's supposed to be 40 to 45,000 tonne. We get to the 60 to 65,000 tonne of stoping and 20 to 25,000 tonne of development. So you're basically replacing that low grade with high grade stoping area, and that's where that grade increase is coming into through to the middle of the year. So all it is just replacement, and it's just through productivity and following that mine sequence. And it's worth focusing on the Deakin area that we're getting to now, because this is an area where we're seeing some fantastic results from. So Bellevue was a mine back in the late 80s to late 90s, and if you talk to any of the old timers that were around in those days about what they found underground, there was a lot of high grade sort of blowout zones. We're seeing that in Deakin in the stuff that we're hitting now, and we hit it in the development, went back, had a look at the block model and said, hey, there's actually potential for there to be one of those high grade blowout zones where we are right now. So we went back and drilled it on really tight centres. So these are 10 metre by 10 metre drilling. And you can see some of the grades and thicknesses through here. Like, this is truly world-class information that's all within where we're mining right now. So these mining levels are levels that we've mined in the last couple of months, and we're about to start stoping in there. So this high-grade area is going to be feeding the mine plan over the next little bit. And you can see some of those development faces there as we went through that high-grade, the top level and the 1038 on the two top ones, 1018 on the bottom. Fantastic data ahead of us. And, as I said before, we have this Deakin area here. This is only a small part of that bigger Deakin area. And when you have a look back and say, okay, is there, based on the data we have, the opportunity for repeats, so similar data that we could have picked that high-grade Deakin zone in earlier? And when you look back through there, what you can see is 1, 2, 3, 4, 5, 6, potentially 7 different areas that we can now go and target and drill on tighter centres and look for further growth. So exploration-wise, this is the area that we're mining now, and there's a lot of potential for upside as we go through there. And then Deakin as well. When we look through the next couple of years of the mine plan, what you can see is there's an increasing contribution to that mine plan coming from that area. So it's something that is going to build up as we go, and we have a 10-year mine life already ready to go, all designed in front of us from the jump. So it's a pretty advantageous place to be. And when you have a look at the wider exploration picture at Bellevue, that Deakin area is this bit that's lit up there. So it's a very high pyrrhotite part, so it lights up really strongly in the downhole electromagnetics. If you then have a look at the downhole EM against that mine plan that I was showing you before, here's Deakin sitting over here. We have a fault that's well known, pushes the ore body down about 120 metres. You can see, Viago, how it continues across that fault. There's potential with some untested for a Deakin extension or a Deakin repeat just by going to the south and getting in better drill platforms, and developing those drill platforms is something that we're going to do. The whole system sort of dips to the south. And this area is one that we're going to be in a position that we can drill as we go. So, when you look at the mine back in 3D, and this is the orange and red is what we're going to be mining over the next 18 months. And I'll spin that around. What you can see is a big drill drive that's getting built off the bottom of the page here. And that drill drive is going to be the platform that we drill that southern extension of Deakin from. Plus, we're going to have multiple jumping off points that we can drill from Deakin, looking at repeat footwall structures. So, all of this has not been tested because we've been busy building the mine, doing a lot of grade control and building that up. But these are walk-up, sort of high-quality, potential multi-million ounce exploration targets that we can go and target, now that we have the drill platforms, now that we have the cash flow to do it. From a processing perspective, we've got a brand new processing plant built by GR Engineering. It's a 1 million tonne per annum plant. We've been achieving 1 million tonne per annum from 6 weeks from turning the plant on, which is a pretty good spot to be. We have run the plant at times up to a 1.2 million tonne per annum rate. At the moment, we need to get the mine to match the milling rate. We need to optimise, our maintenance, our reagent use, our recoveries and everything at the 1 million tonne per annum run rate, but pushing it to 1.2 is just about pushing the efficiencies in the mine, and is something that's in our future. An upgrade to 1.5 would be driven by exploration success, and you saw the exploration targets before that might be able to drive that. I did say that the ESG and sustainability is something that's core to Bellevue. It is an area that we focused on as a developer, which is not the typical path. The typical path might be build the mine, build the infrastructure, and worry about the soft stuff later. We've actually tackled it in a different way, where we've built one of the most progressive power stations early. So it's a 90 megawatt hybrid power station. So it's going to have wind, solar, thermal, batteries. Be 80% renewable energy and allow us to achieve a net zero product aspiration from the mine by 2026, which is industry leading. There's the potential that we can sell some of that product at a premium as well. But what it also does is it attracts good stakeholders. So we have a lot of government support, a lot of traditional owner support, and huge support from our base of employees as well. So look, I hope that covers a lot of the story. We've got a booth outside if people want to come and have a chat on it. But fantastic project, a fantastic time to deliver a fantastic project into the market, and a lot of upside from here. So thank you very much for your time.